to today's action, there was quite a bit of it, that's for sure. We've got Ira Walker, UBS Managing Director, Senior Portfolio Manager, who is calling for a rotation into cyclical areas. We're hearing the beat of that drum louder and louder these days. He will tell us what names specifically to play. Dennis Neal standing by to report Disney second quarter earnings as soon as they come out. They're due any minute. And Larry Shover is in the pits of the CME. Larry, to you first. We got our Dow 15,000 close today. Everybody is piling into the stock market. The bullish momentum seems to just be building upon itself. What do you think?
Well, I think we're all asking the wrong question, including me. For weeks and for months, I keep talking about the next growth metric, the next catalyst. What's going to take the market higher when really it's becoming a very hollow question? I think the bears now need to look for a catalyst, and there's no catalyst around right now. We're rallying on macro calm in Europe. We're rallying on central bank intervention. We're rallying on reasonable valuations in the stock market. So we continue to grind higher. It's painful. It's tiring. It's confusing, but that's what's going on right now.
In other words, Larry, the lack of no new news. Europe's been relatively quiet. There hasn't been a lot of new economic news, at least for this week. We're post-Fed. We know where the Fed's plans are leading these markets. Is that why, again, to your point, to your phrase, we're just grinding higher? Is it going to take a headline catalyst to be a catalyst?
Yeah, I mean, compared to 18 months ago, where every headline that came out of Europe zapped our markets, right now the OMT was the best invention in the last 12 months. That's kept the calm contained to continental Europe, so we're not susceptible to all that headline risk.
Okay, hey, Larry, I got to jump in here and cut you off. We got Whole Foods numbers. Joe, Lynn, Kent, what are they?
Hi there. Yes, we do. We just got Whole Food numbers into our newsroom. Trading at 0.76 is what it came in as, beating its 0.73 estimate, and total revenue at $3 billion. And stocks are late trading up 7%, and that's the latest of what we have for you from Whole Foods.
We are seeing a huge jump in Whole Foods right now. We haven't seen it over $100 for a while. It ended the day at $92.80. Now, this is, by the way, a lot of people have been looking for a solid company that has been kind of slumping recently. The shares are down about 3% in the last 3 months. It looks like they found it in Whole Foods. Larry, go ahead.
Yeah, I'm sorry. Yeah, they did, and that stock has been belabored. A great stock. Just consider this. I mean, in the last 3 years, it's averaged 10% of beat over all of its competitors, and to say that it really doesn't have many competitors. And so a great stock. It's got, what, 340 stores. It's got a lot of room to expand outside of U.S. and the U.K., and they're also looking at perhaps
by the way, Larry, it just approved a 2-for-1 stock split as well. Of course, these things are psychological more than anything else, but again, that may have moved the stock as well. Go ahead.
It could have very well, but boy, that stock's been stuck in the mud when you consider all the consumer safety stocks that have done so well. Whole Foods, as you said earlier, it has not gone on the gravy train. It's a great stock, great company. Their balance sheet is nice and fat. What's kept it down is perhaps it needs to continue at 14 to 15 times forward earnings to keep the momentum. That's pretty fat, but they have a very good balance sheet, and people want to eat better. I love Whole Foods, a good company and a good stock.
All right, Larry, thank you for that. Let's also ask Ira Walker. Ira, welcome to. Thanks for joining us. I get your immediate reaction. We heard from Whole Foods, and one thing that sticks out to me, I know that the aftermarket's bidding shares higher, but the revenue was a little soft at $3 billion. The street was looking for $3.03 billion, despite the nice beat on the EPS.
Well, we like the market here. We like Whole Foods. We like the cyclical area, especially. We're trying to get away from the traditional stocks, Procter & Gamble, Johnson & Johnson, the consumer staple stocks. So we're moving away from those stocks going into cyclicals right now.
Larry, it's very interesting. Ira, I'm going to get right back to you, but I want to go back to Larry Shover for a second. How much longer? We're hearing now Whole Foods missing in revenue. How much longer can corporations post these healthy earnings with good margins, but no revenue or a miss on revenue?
I don't know. I think it's all about momentum. People are suffering with the top-line trends, are suffering, and revenue is suffering, like you said. But it seems like earnings per share are beating over, what, 70% of the time.
Doesn't the lack of revenue eventually catch up with the share price?
Yes. Yes, but consider this. We're not growing. We're at 2% GDP, and it seems like the stock market is okay with that right now. So it seems like for the time being, we'll continue to grind higher, even though revenues are missing. That's not saying that I'd be fully allocated to the stock market. I would not. However, I wouldn't get out of the stock market either.
Okay, so would shares of Whole Foods be up 7% if we didn't have such broad market strength right now?
Well, I think it should be up because given the last 3 months, it's been down. And,
but only
there's
by
been
about
so
3%.
Yeah, but consider what the rest of the stock market has done. That's pretty poor underperformance, especially when you look
really
at safety stocks.
Wow. Okay.
Ira, let's bring you back in. So J&J, P&G, all of the double initial stocks, and we have the ones with the big dividends, the consumer staples. You're saying it's time to move away. They've had their run up. It's time to just hold on to them if you've got them, but not buy more and get into other sectors. Now, a lot of ETFs that you brought along with us that sort of represent those other sectors. I want to start with biotech. This is an area we haven't been focusing a lot on. It's been going up, but nowhere near as much as the consumer staples. IBB is a good ETF if you want to buy into them. Explain.
Absolutely. Year to date, IBB is up 26%. And we like that sector right now. We think that biotechnology has taken the market to this point, and we do believe that biotechnology will continue to go higher, along with, as I said earlier, the cyclical stocks like the oil drillers and the industrials. We do like Whole Foods, and we do like Johnson & Johnson, Procter & Gamble. We just think that they've moved up enough, and the new money is going into cyclicals.
Look for the new money, where the new money is going. By the way, we got Electronic Arts numbers coming in. Joe, what do the numbers look like?
Hi there. We're just getting in new numbers into our Fox Business newsroom, and we are seeing 55 cents in adjusted earnings, which is not exceeding. It's under the 57% that analysts were expecting. Now, stocks are late trading up about 5%, and in terms of revenue, coming in at $1.04 billion, which is in adjusted revenue, which is just over the expected $1.03 billion.
Okay. By the way, Electronic Arts has been one that's been kind of riding on the coattails of Disney. Right. They just signed that new deal with Disney. They're going to be spinning off some of the Lucas products that Disney has bought into games. Larry, what do you think of this? They missed on the EPS, but again, after hours, they're trading up.
Yeah, trading up. The deal with Disney is a really good thing. Also, keep in mind the momentum they've had on putting on to mobile phones, smartphones. That's been very, very good for them. That's offset all the turbulence the company has. They haven't had a CEO in a long while, a lot of layoffs, and on the downside, in addition to that, taking games off of Facebook, which they did about 3 months ago. That's been a downside, but all that's been absorbed in the stock. It's very cheap right now, and given the top two things, it's probably a pretty decent buy.
A lot of information. Thank you.
Ira Walker, thank you so much for bringing in those ETFs. Appreciate it. Larry Shover, we're going to check in with you in a few minutes to see how the S&P futures close. And Dennis Neal is standing by.
Okay, S&P futures are closing right now. We want to go back to Larry Shover in the pits of the CME. So, Larry, obviously a huge day for the bulls with the Dow closing above 15,000 for the very first time ever. Yep. And you were saying we're asking the wrong question, that this market continues to grind higher. There are no risks, no catalysts in the near term. So what do we do from here, especially if you have fresh money to invest?
Well, I think right now what's important to recognize is that stocks are tired. That's important to remember. However, a tired tape doesn't mean one that's going to be for sale. So to answer your question, slow and steady wins the race. We're never going to pick the right industry to be in, the right sector to be in at the right time. Slow and steady. And you're right, we do need to see some type of growth momentum. The growth has not collapsed, but there's no momentum right now. But we need to see something to propel us further. We don't have that. So right now, slow and steady. Enter the market in a broad portfolio.
It's one heck of a relief rally, right?
Slow and steady at 15,000. The Dow at 15,000 long before folks thought it was possible.
Okay, breaking news.